If every country on Earth is drowning in debt, then who exactly is the creditor? Who are we borrowing from when the entire world owes money? It's one of the strangest paradoxes of our time. Every nation, from the richest to the poorest, owes trillions. The United States owes over $34 trillion. Japan, over 250% of its GDP. Europe, drowning in bonds. Even developing countries, deep in IMF loans and foreign debt traps. And yet, the money keeps flowing. The interest keeps growing. But where does this infinite debt lead? And who, or what, stands at the other end of this invisible ledger? Today, we're pulling back the curtain on a hidden system that quietly governs modern civilization. A system where debt isn't just money, it's control. If every country is in debt, who's the creditor? To understand how the world became enslaved to its own currency, we have to go back, far before the dollar, before the stock market, even before central banks existed. Money began as trust. Gold, silver, shells, salt, all physical stores of value. Trade was simple. You either had it or you didn't. But empires discovered something extraordinary. You could create power out of promises. In ancient Mesopotamia, clay tablets recorded debts owed to temples and kings. In medieval Europe, kings borrowed from goldsmiths, the first bankers, to fund wars they couldn't afford. And when the bills came due, the kings couldn't pay. So the lenders demanded something else: control. That was the first seed of a system that would one day control the entire world. Fast forward to 1694, the creation of the Bank of England, the world's first true central bank. It wasn't owned by the government. It was owned by private investors. Its purpose? To lend money to the government, with interest. In return, it gained the exclusive right to issue the national currency, effectively selling the government its own money. Debt had become a product. Money had become a loan. The 18th and 19th centuries saw this idea spread across Europe like wildfire. France, Germany, and later the United States all followed suit. When the Federal Reserve was created in 1913, it was sold as a stabilizing force to prevent financial crises. But behind the curtain, it mirrored the same model: a private entity lending money to the government, with interest, using money it could create from nothing. Think about that. The U.S. government doesn't print its own money. It borrows it from the Federal Reserve in exchange for bonds. Those bonds are promises to repay with interest. And where does that money come from? Not from gold, not from silver. It's typed into existence, out of thin air. Every dollar you've ever held is someone else's debt. World War I, World War II, both funded by massive borrowing. Every bomb, every bullet, every reconstruction plan, debt. And while nations fought each other, one class quietly prospered: the creditors. Banks, financiers, central institutions whose profits were tied to the expansion of debt itself. By the mid-20th century, the world had built an economic system that couldn't survive without debt. Until the early 1970s, currencies were still linked to something tangible: gold. The Bretton Woods Agreement of 1944 tied global currencies to the US dollar, and the dollar was backed by gold. But in 1971, everything changed. President Richard Nixon announced that the U.S. would no longer redeem dollars for gold. It was supposed to be temporary. It became permanent. In that moment, money stopped being real. It became purely a symbol, a number on a screen, backed by nothing but trust and debt. Central banks could now create limitless currency. Governments could borrow without restraint, and global markets could inflate beyond comprehension. The new game wasn't about gold. It was about credit: who could create it, and who could control it. Today, every dollar in circulation is born from debt. If all debts were paid off, tomorrow, there would be no money left. Let that sink in. When banks issue loans, they don't take existing money from someone's account. They create new money with every signature, every mortgage, every credit line. Your loan becomes their asset. Your debt becomes their profit. And this logic scales up to nations. Governments borrow from central banks and private investors. Those debts are sold to other countries, institutions, and billionaires. A vast network of bonds and obligations spans the planet, a spiderweb of promises no one can ever fully keep. The world's total debt now exceeds $320 trillion, more than 3 times the global GDP. That means we owe 3 times more than we can ever produce. But here's the twist. This is not a bug. It's the design. The economy needs debt to survive, because every dollar is born as someone's liability. If the debt stops growing, the system collapses. So, if every country owes money, who's the creditor? The answer isn't a single person. It's a system, an invisible network of central banks, private institutions, bondholders, and investment funds that trade debt as if it were gold. At the top of this pyramid sit organizations like the Bank for International Settlements, BS, sometimes called the Central Bank of Central Banks. They don't print money. They coordinate those who do. Then there's the IMF and the World Bank, lending to struggling nations, not out of charity, but to ensure those nations remain tied to the global debt structure. Private giants like BlackRock, Vanguard, and State Street hold trillions in government bonds, effectively owning slices of countries themselves. So when we ask, who's the creditor? The answer is chilling. It's not one entity. It's a system of ownership without accountability. A financial empire with no flag, no army, no borders. Yet it controls the fate of nations. Debt was once a tool for progress. Today, it's a tool for control. Governments borrow to fund promises they can't keep. Corporations borrow to buy back their own stock. People borrow to survive, to study, to own a home, to pay medical bills. The average citizen is trapped in the same cycle as their government, working endlessly to service interest on a debt that never dies. Meanwhile, the lenders, the unseen few who profit from the creation of credit, accumulate wealth without limit. In 2008, the system nearly collapsed. Banks gambled with derivatives built on debt. When it crashed, governments bailed them out with more debt. The same people who caused the collapse were rescued by the very system they exploited. And once again, taxpayers became the guarantors of global finance. The debt machine never stopped. It just changed gears. So, as we step into the digital era, the system is evolving. Central banks are experimenting with digital currencies, programmable money that could track, restrict, or even expire based on policy decisions. At the same time, global debt keeps exploding, fueled by wars, stimulus packages, and financial bailouts. In 2024 alone, governments borrowed more money than in any year of history. And while citizens debate inflation or unemployment, the real story remains untouched. The debt pyramid grows, and the creditors grow stronger. A new form of invisible control is emerging, where money isn't just borrowed, it's engineered. Every crisis becomes a reason to print. Every bailout, a transfer of wealth upward. And every digital innovation, a chance to tighten control. History has seen this before. Ancient Rome debased its currency and collapsed. France printed assignats before its revolution and fell into chaos. Weimar Germany printed marks until they were worthless, paving the way for extremism. Every empire in history that abandoned sound money eventually imploded under the weight of its own debt. And yet, here we are again, repeating the same cycle, only on a global scale. This time, there's no backup plan. There's no country left to bail out the rest. The truth they don't teach in schools: money is not wealth. Debt is not growth. And printing doesn't create prosperity. It only borrows from the future. Real wealth comes from production, innovation, and value, not from adding zeros on a central bank's balance sheet. But as long as debt equals money, growth must always come from borrowing. And when borrowing stops, so does the illusion of progress. The entire system depends on our belief that debt can grow forever. But nothing grows forever. So what can we learn from this? Takeaway 1. The global economy runs on debt, not money. Every dollar you hold represents a promise someone else owes. Takeaway 2. The real creditors are not countries, but networks of financial institutions that profit from the expansion of debt itself. Takeaway 3. The system survives on confidence. Once people lose faith in it, it collapses. The question isn't who's the creditor anymore. It's how long can this illusion last? Because when every country owes money it can't repay, when every currency depends on endless borrowing, and when every financial crisis is solved with more of the same poison, at some point, the system will break. And when it does, everything we think we know about money, savings, value, security, will be rewritten overnight. But understanding this truth is the first step toward freedom. Because once you realize the game is rigged, you can stop playing by their rules. You can protect your wealth, your time, your choices. So keep learning. Question everything. And remember, the moment you understand who the creditor truly is, you stop being the debtor. If this opened your eyes, hit subscribe and help others see what's hidden in plain sight. Because the next financial revolution won't be televised. It'll be digital.